Are you one of the many busy professionals working in offices day in and day out? Do you wonder how some people grow their wealth fast, retire early, and play on workdays? Well, you're in luck, because Ginny Bowling hosts this show, Pivot to Prosperity, where she interviews people that can do just that. Play on workdays. Many guests have become financially free. She also interviews people that are on their journey and people that are in support roles, like attorneys, contractors, brokers, and others. Commercial real estate is the common element. She is on a mission to be sure busy professionals know they can own substantial commercial properties too, like apartments, self-storage facilities, and others, and not have to do the work managing them. Passive investing is the key. Syndications are the typical method. Tax write-offs are some of the biggest rewards. Ginny and partners find the deals, build a strong team and business plan, then offer the investment opportunities to passive investors. New episodes are released every Tuesday at 12, so watch for new releases. If you want to get involved, let us know. You need to get pre-qualified to hear about most deals. See the show notes for contact information.
Hello. Ginny Bowling here with Pivot to Prosperity, brought to you by Pivotal Real Estate Investments, where we help investors build wealth and income through commercial real estate that also improves communities. And today we have Ismael Rey Reyes as our guest. And thank you for coming. I'm going to call you Ray.
Me. Appreciate it, Ginny.
We had so much to talk about. We never got recording last week. We talked for the whole hour and didn't even record. So he is a distinguished guest. And so what I will say is I want you to tell us, Ray, about your journey into real estate.
You know, I don't know if you have the same thing, Ginny. I bet you do. I mean, you've been in real estate a long time, but you know, you kind of have the itch from as far back. I did. I certainly, you know, as a kid, I remember playing Monopoly as being my favorite game. The idea of being in real estate was not just a money-making operation. It was just something more. But like all of us, we go through our cycle of growth and education, formal education, some of us. And so I went to college, I got a degree in psychology because I just didn't know what I wanted to do. But I felt it was one of those that I could use in a lot of different ways, kind of like a general studies degree. And I also, because I didn't have a ton of money for college, I also joined the National Guard, the Army National Guard. So I was a military police officer. Took a year off to go, do that and get some money for school, which is what a lot of people do in the military. And along the way, I realized, in fact, I went to Desert Storm. That took another year away from my college, timeline. But I went to Desert Storm. But I realized that I really liked the military. There were certain things about the military that really are very unique. It is a brotherhood, and you do things and you suffer together, and you grow this bond, and it becomes kind of bigger than than the sum of its parts. When you're as collective. And so I actually, in my third year of college, I actually joined ROTC. So. And then when I graduated from college, I had my bachelor's degree, but I also had a commission in the United States Army. And shortly after that, I went on active duty, because I did enjoy that, and I like the aspect of serving. But I also, in the back of my mind, I'm like, well, if I want to do that, I want to get paid for it, right? As an enlisted soldier, unless you're just sort of thinking about going to college and other things. Most people don't become enlisted to do 20 years in the military. I think most people, at least the people I know that want to do that are trying to get a more formal education so they get on the officer ranks and get paid a little bit more. So I became an officer. I got my commission, and then 28 years later, I decided to actually go into multifamily investing full time. Now, during my career, especially once I got to be, once I became a captain, I had a little bit more disposable income. I had a little bit more. My family was settled. My wife and my kids, you gotta get that right. But once we were in a good enough place, then I started investing in single family, and because I had that itch, right? And along the way, once I got to the point where I was getting ready to retire, my thought was never, a lot of people retire to the military and they go take a 6-figure income doing what they were doing in the military. In my case, I was an intelligence officer. It would have been very easy to get a civilian job doing something within the realm of intelligence or something within the realm of, essentially working at the higher echelons of military. But I knew that what I wanted to do was this. And so, I started right away, right into this path of being an active investor and in the multifamily state. The only other thing, and we can talk more about it, is how I've sort of some of the little transitions that I made since I retired and with my overall plan. And we can talk about the fund, we can talk about different things that I'm doing at that point. But that's it in a nutshell. It's just the itch that's kind of gone along my entire, lifeline, if you will, and then other pieces of me that have wanted to do certain things to serve my country and duty. And once I got that out of the way, then it's just about, growing wealth, not just my wealth, but the wealth of the other people that I know and that want to come on this journey along with me.
Very good, very good. And that's why we connect so well, I think, is that doing it with people that we also like being with and that connect. But I didn't realize you were in the service 28 years.
I did. I retired as a lieutenant colonel in 2019, just before the pandemic, which was, I was, that's a whole different story. We can talk all about that, but, essentially here I am going out into the private sector, if you will. And next thing you know, I guess it was a little bit of an advantage because I didn't have to go work somewhere. I could do part of the things that we enjoy. A lot of the people that are in this business is the flexibility that we get to be able to really work remote. As long as you have some connectivity and you can get on a call and you can get on some video, you can do this anywhere. Right now, I'm in Florida. Ginny, where are you at again? Remind me. You're on the other side of Florida, right? You're in Orlando. So it would be a lot harder to try to do this if we had to drive and get somewhere.
Yeah. And being in Florida, it didn't lock down as bad as a lot of places. So,
yeah.
But yeah, me being right by Disney and Universal, it was shocking when they closed. Then it's serious, right? But very good. Well, and I got to ask you this then too, just for fun. Did your family move much when you were growing up?
My family moved from Puerto Rico, and the story that I got was we moved from Puerto Rico to Milwaukee, Wisconsin, and they were like, "Wait, you're Puerto Rican in Milwaukee? What the heck is that all about?" Well, it was one of the cheapest tickets out of Puerto Rico. There was 4 of us, so four kids, and it was cheaper. And on top of that, we had, like typically happens when you have, family migrations, one person kind of dips their toes somewhere else and they say, yeah, this is a great place. And the next thing you know, you've got that sort of little mini hiatus or, the immigration pattern that kind of flows there because you've got a support person that's kind of, leading the way. And so I did. I had an uncle and some other family that had moved here. And then we just kind of came. And then there was a lot of jobs. That was part of the reason that the tickets were so cheap, because there were a lot of factory jobs, industrial jobs at that time. This was pre-NAFTA, of course. I'm dating myself, but pre-NAFTA, a lot of that, those type of work was being done in the Midwest and a lot of other places. And so my mother worked as a seamstress, and she was able to plug in right into a sewing machine operation. And my stepfather was working in a tannery. And right away they were able to get to work and blue collar. And it was, we weren't looking for any free rides. We were just looking for the opportunity. And it was a good way to jump in.
Wow. Well, and are your parents still alive?
My actual father died. He died a while back. And my stepfather is still alive. He's back in Puerto Rico. My mother and him separated, so he's got his family there. And my mother actually lives pretty close to you. She's in Lakeland.
Oh, okay. Yeah.
So,
yeah.
I make my trip out that way every once in a while from here where I am, just north of West Palm Beach in Port St. Lucie.
I bet they're very proud of where you're at now. That's, yeah. So, and then you got into single family and multifamily, or multifamily first, then single. How did that actually go?
So like a lot of like it happens to a lot of professionals, you don't know what you don't know. And it was very easy. Most of us can, if we have a little capital, we can kind of do a single family. Whether we are accidental landlords, in our case, a lot of military folks, they move somewhere, they get we have a permanent change of station, which is what it's called when they basically move you somewhere to operate out of. And so we either buy or we can rent or live on base. It never made sense for me to rent. And living on base was sometimes hard to get. And frankly, we like the idea of being out in the economy a little bit more and having that flexibility of not being on the actual installations when we could. So I would buy a house, and and then 2-3 years later we would move, and that house would become a rental. It was very deliberate for me in that sense, not for all people. I guess the one thing that you wish you could do differently, but I always tell the story because I think it's funny. Like most people, when they think about hacking their way into financial freedom through real estate, they think, okay, multifamily, and their mind is like, oh, I can buy a duplex, I can buy a triplex, and to get started, right? Because it's still considered single family. Up to 4 units and below is still considered a single family from a financing perspective. But I could never get my wife to want to live in a fourplex. As much as it's like, hey, it just makes a lot of sense. She's like, you're gone way too much. I deployed a lot. We traveled a lot, and a lot of times it was me by myself, and she had the kids back home. And so, so it was. I understand that, and I think it would have been a lot different, if it were just me, to be able to do certain things versus having to consider the security and the safety of the family. So ultimately, we had a lot of houses, we bought along the way. Initially, they didn't really cash flow because we were buying nicer houses at market rate. The market rates. It wasn't initially to rent them, and so you have to kind of get through the first couple of years where you were rent a couple of years. But over time, they appreciate, just like everything else. You got to take your lumps in the short term. So it made a lot of sense that way as I was, in the military. One of the kind of things that happened to me when I really started thinking about switching over into multifamily is, and really more about passively investing versus, actively being involved. Because when I was stationed in Mexico out of the U.S. Embassy there in Mexico City, and my wife was working in the embassy. I had my job working, supporting and helping assisting the Mexican military. It's very busy work. And we had a property in San Antonio that the tenants decided to do sometimes what tenants do that makes things difficult, right? They kind of wanted out, and they were trying to figure out how to do it. And they essentially got so bad that our property manager, because of course you have to have a professional property manager if you're not going to be on site, and we weren't. Our property manager said, you know what? It's great. Would have loved to get that little 10%, rental income, but this is way too much work dealing with these tenants. Bye. See ya. And so now all of a sudden we had a problem. And so my wife actually took the brunt there because she had a little bit more flexibility in her work. She wasn't happy about it, but she had to end up going back and dealing with that situation, right? And so I just kind of in the back of my mind, I just like, this needs to be. I need to figure out how to do this because the more rank you get, the busier you get. And so in my case, I started thinking about other ways, passively investing in multifamily, not necessarily single family. The question was how to do it, how to finance it, how to get the money for it. And that's obviously things that you learn along the way.
All right. So, and that's something that we now teach other people, right? And so how did you start? Were you using retirement funds then? How did you solve your problem?
So initially what I did is I just sold off a couple single families, the ones that I didn't, my decision was, as I kind of wanted to settle down in Florida, I was getting closer to retirement. I didn't need properties in other states. So they still gave you the same type of problems, and there was no scale there. So I'd have a sprinkle of homes all over the place. So the idea was, okay, I need to consolidate. And in order to do that, I just started selling a couple of assets, and then I would take that. I didn't do any 1031s. It's the one thing I should have done. I sold those assets, and essentially I took the capital and I just reinvested it into passive deals, which technically, if you're investing in a syndication, which is what I did, you couldn't really use, not easily anyway, unless you have some sort of a, more structured agreement and you have enough capital. It's hard to 1031 into that. So I essentially just invested as a limited partner in several syndications because I wanted to learn about it more than anything else and figure out if that's something I wanted to do myself. And so I I invested in a couple of deals on areas and properties that or on areas that I wanted, and then I looked for operators in those areas that that I felt I could trust and I could connect with, and that was kind of part of my journey going into from single to multifamily.
So 2019, you got into multifamily.
Yeah, and I started learning about it right around 2016, 17. Obviously, you don't like to just jump into something cold, but you really started learning about multifamily and learning about how we can get into these deals without having to fund the whole thing. Because I think that's the limiting belief. The limiting belief that, oh, I can't do that. I can't. How am I going to afford to buy, 2 million, 3 million? Just add the number, right? Depending on where you're at, just add a little bit more, and there's your limiting belief. And syndications is a way to get around that, because you're basically joining forces with others and combining your monies and your experience and your talents towards that unilateral goal of acquiring an asset and then obviously managing that asset and growing your wealth.
Really increases the buying power. It really does. And the scalability of it. Instead of buying one refrigerator, you're buying 50, 100. Yeah. Yeah. It's crazy that especially for me, that 40 years in real estate, and I didn't realize I should be scaling, really. I was doing the individual rentals too and buying property for other people. So yeah.
I was just talking to a guy who he was a CEO of a family office. And he just happened to connect because, you're networking and you network with people. And as part of that, you get to hear their stories. And he's like, I just got tired of making other people money. And this is a professional. He's not in his 20s, he's in his, probably late 30s. We didn't really go into his age, or maybe early 40s. And he just had the epiphany, like, I know what I'm doing, but what I'm doing is not helping me really. It's helping them. So he's making this transition. So everyone has their own timeline of when they sort of do things. But yeah, it's crazy that when you work for someone else, you're building somebody else's dream.
Right. In my case, it was mainly for government. Yeah. So it wasn't like making them rich or anything. It was more of a public service in a way. But then you get busy with, you work a lot of hours, and then you're trying to do the private life, being a mom and all this kid stuff. And someday hopefully you wake up, but that's one of our jobs, is to try to knock on that door to tell people there's opportunity here. And to me,
squelch those limiting beliefs, like when they put it in front of you, you said, well, here, have you thought about doing that? And so, yeah, absolutely.
One of the organizations I belong to is the local apartment association. I don't remember if we got talking about this, but so I go to I'm on the membership and special events committee. So I get talking to these people, and in our committee meetings, we get to introduce ourselves. So I say that I help people buy large commercial assets like apartments. And that means that people like you and I can own these big major assets together. And their eyes like, because they're so used to saying the owner's coming, the owner's coming. Well, if they can be an owner now too, they'll understand a lot more. So it's really cool to watch that wide-eyed realization. But and same with the REIA people. You know how that is. All these people that are investing in the single family, they don't realize it's not that hard to put some of that money that they don't want to be investing in their single families, put it to work in the multifamily, and they're scaling twice as fast. So
yeah, one of the things that happened to me is that when we would go to some place, we would be stationed, and it only happened a couple of times. When I was working in the Pentagon, more than anything else, it was just too expensive to buy, and frankly, I just didn't. I wasn't planning on retiring in that area, in the DC area. So you get put in a position where you're like, okay, I want to invest, but I'm not going to buy a house. I don't want to have another single family house. What do I do to invest? And so that's where the passive piece of investing in, as a limited partner in some of these syndications took flourished and became something I really started looking at, because otherwise you just, in our case, if you're so busy and that's really your only angle, I'm missing 3 or 4 years where I'm not investing in real estate because of, basically being in a place where I didn't want to be. And so you're absolutely right. This gives you some flexibility to even look outside of your own, wherewithal, your own area, your own geographic location. Sometimes some people don't want to invest. I don't know about you, but I get California investors reaching out. We got some stuff going on in Texas, and they're like, they like living in California. Nothing wrong with living there, but don't want to invest in real estate in California. And they give you their 20 reasons why, and we probably have another 5 that we can talk about just on this show of why probably doesn't make a lot of sense to invest in places like California where it's not really pro-business, right? And then we won't go into that, but essentially it gives you the flexibility to do these things, to scale outside of your own little backyard.
Huge. I think that's just huge. And what I try to also help people understand, which I know you do too, is you can start with as little as $50,000. Most people don't realize that. They save a lot more than that to go buy a property, then they have to manage it and sign on the loan and all the rest of it. Whereas what we do, they don't have to do all that. It's all passive. So yeah, it's a beautiful thing. I think on my LinkedIn, I call it the best thing since sliced bread.
Absolutely.
So you are now actively you have a property under contract, which you are able to talk about because it's a 506C, right? So tell us about it.
Yeah, so one of the things that I did is in my journey, I started working as more of an operator or general partner in multifamily. And that was, I did that for several years. But I realized that what I really enjoy doing more is actually raising capital, talking to people and kind of talking to them about what they can do and how they can employ their money, right? Passively or even actively. Some people every once in a while get on a consult call with somebody that really wants to be an operator. They got the itch. And so how do I help them with that, right? How do I get them, keep them from making huge mistakes along their initial journey? But one of the things I did then, because I understood that, then we created a real estate investment fund. And so through that fund, then we're able to use capital from investors to then invest in syndications and multifamily. And we can frankly invest in a lot of other things. We're focused on multifamily because I like investing in things that people need. I don't like investing so much in what people want. You can get it, you don't have to buy that Starbucks cup of coffee, but you do need to live somewhere. And that's kind of one of our models. So that's where we've focused. It doesn't mean that there may not be an opportunity somewhere else, but right now we're looking at multifamily. And so we have this 144 unit Class A, 2023 built multifamily property in the Dallas-Fort Worth Metroplex. It's about 12 miles away from downtown Fort Worth, and in a booming emerging what used to be a bedroom community that's just getting kind of sucked into the whole Metroplex. People are willing to live a little bit further away from downtown areas because a lot of them work remote, just like we're doing, right? And so they're able to live where they want and still get the meet their professional requirements to make money for their family. And so this little area is fantastic. And one of the things that I'm focused on right now on real estate and multifamily specifically is we do potentially have some indicators of a recession. Some people will argue yes, some people will argue no, but at the end of the day, you can also invest in things that are a little bit more risky, that maybe have higher upside, opportunistic deals, which is we can talk about some of these definitions, but it's definitely more opportunistic to buy something cheap, you fix it, call it a value add. In single family, they call it fix and flip, but essentially you're doing the same thing. You're taking something old, you're buying it for cheaper, ideally, you're fixing it, you're selling it for more. But that's opportunistic because you're having to deal with financing that's not ideal. It's not long term. You're working in bridge products. Usually means you have a 3-year kind of loan, and if you don't have any black swans or anything going on within that time frame, then you can turn a tidy profit. Really make a lot of money by doing that. But there's a lot of pitfalls, and a lot of people that were doing this strategy, the value add strategy, for the last few years, found themselves, especially if they got into deals as the Fed was losing its mind with the Fed funds rate and interest rates went up the roof, because nobody projected that kind of an interest rate jump, right? And it's not a direct correlation. And some of my more technical investors go, well, that's not really what caused, that's not really what causes, mortgage rates to go up. But it's definitely a large indicator, right? You got the 10-year yield, which is kind of a much more closely aligned number that tracks rates. But nevertheless, overall, there's a very huge correlation between what the Fed funds rate can do, right? And in this case, people that were buying with an anticipation of selling something for cheaper, or not for cheaper, for more, and making a profit, now find themselves in a situation where they can't refinance the asset because the rates are so high that it doesn't match their exit strategy, and so they can't refinance. And then if they have to sell it, they have to sell it for cheaper because those people that are buying are looking at it from the other coin. There's no way we're going to be able to buy this at your price point and make it work with these higher rates, higher debt. So that's very risky right now. We're looking at Class A assets in great markets that, because the market in and of itself all had the same kind of general level of distress at the national level, right? Every market's different, but at the very top levels, you did have this pressure from the Fed funds rate that really drove a lot of the multifamily specifically downwards. And the other thing that the pandemic did, which makes it even more interesting, is people stopped building single family during the pandemic. It was just too hard to do. And it was very costly to do. So developers were not doing single family, by and large. They started doing a lot of multifamily. And where did they do their multifamily? They were looking at these great places like Dallas, Fort Worth, like, markets like Orlando, and markets in certain areas that they knew that had the population growth and the economic diversity, and there was enough going on there that it was a good strategy. But they overbuilt because everybody's looking at doing the same thing. So then we had this glut of properties that are out there, but you still have the pressure of the pricing because the Fed has not really dropped the rates significantly enough for it to matter. So now we have distressed assets that are Class A, and in our market, in this particular deal, the property to build it, the construction price is more than what we're paying for this thing. We're paying $160,000 a door for a new property in a submarket where the average median income is $80,000, which, obviously in some places like New York, maybe it seems like that's nothing, but in Dallas and a lot of the southern markets, that's a good size, that's a good size average median income. And so it is not going to be one of those deals, that we think is going to be, triple your money, but it is a cash flowing deal because you're not fixing anything. We're not buying something old, fixing it and trying to sell it for more. We're buying something new. We're just raising rents a little bit because, there is some flexibility in these newer properties. We're able to raise rents, not a lot, but the market is starting to turn that way. So we're able to raise rents and not have to worry about crazy expenses from it. So base hits, doubles, singles is what we're looking for at. And this property is probably a double with some potential to really do a lot more because of what's happening. Dallas is if anybody just does some quick research, is a market that's coming up as the emerging market that's going to make the biggest rebound right away in 2025. They're saying it's going to explode because you never stop people going there and the economy growing. That's a bigger cycle. Those macroeconomic trends don't stop as quickly as real estate cycles do, right? And certainly real estate cycles are still slower than the market, which can go up and down in a day, but there's still some cycles there. But these macroeconomic trends where people are moving families, that's not something that changes on a dime. So you never lost that economic power in places like Dallas, Fort Worth. You just had to ride out the distress trend from the rates. And we think we're in a very, very good spot now where just about bottomed out, and we're going to go back right up and ride that roller coaster up to the top in this next cycle. So we're really excited about that. The easy way to find it is stresslesscapitalfund.com. offering. And you can find everything that you want on it. That's a landing page. It has everything about the deal itself. But it is when you can buy something for cheaper than it costs to build, that's a winning strategy.
I agree. And that on top of everything that you just said, the fact that, Orlando and Dallas and all, they were going up, then all this supply came on. And with the interest rates in a high amount for a prolonged time, we started hitting that stress. But that's when all these builders cut back too.
And that's a great point. The supply and demand is critical, and they stopped building. So just like they built too much, then they completely stopped building. So for the next few years, we're going to see deliveries going way down. So that's going to, get that curve going again in our favor as a multifamily investor, because you don't have the absorption. Very good point, Ginny. I failed to mention that, but that's part of it. It's all supply and demand, and I'm going to be on the good side of it soon.
Right. It's all location too. You really got to pay attention to what you got. But so that's exciting. So how much money are you raising for this one?
So our fund is allocated $1 million, which isn't a lot. The particular deal was a 506B initially, and they raised capital under the 506B, which meant that you and I couldn't talk about it, right? At that point in time, it was much more about personal relationships and people that are non-accredited investors through those links that were able to hear about that opportunity. But once we get to the point where we've already maxed out the number of non-accredited investors, which is 35 or less, then a lot of the syndicators are now basically using a hybrid where they flip it over and they make it into a 506C. So now it opens up the floodgates to much larger amounts. So on the 506C side, we've got a $1 million allocation, and that's going quickly. It isn't a lot. In the deal itself, the other advantage is if you're investing in a deal, you mentioned $50,000. That's typically when you're investing in a lot of deals, especially if they're Class C, that's typically what you have to come up with is $50K. But when you start looking at Class A deals, that minimum number goes up. So the minimum number through the operator on this case is $100,000. And what they're offering to that investor who invests less than $1 million is not as good as what we're getting through the fund, because of those relationships and our ability to kind of create higher investment amounts into these deals. So we're getting a better split of the upside, and we're getting some protection on the downside. And our investors only have to put in $50,000 instead of $100,000. So you have to make the funds more attractive than people going directly to the investor, because why would they? Why would they go to you if they can get a better deal directly, right? So we have to make these deals attractive. The other piece of our fund, which is important, is that once you invest in one deal for $50,000, then you can diversify within the fund and only have to contribute another $10,000 to get into a separate deal. And it's a customizable fund. So it's not like you putting money in, it's a blind pool. You get to pick where to use your money on what deals. And so it gives some flexibility while still getting the benefit of having to be within that fund structure.
Thank you for elaborating. Right. Yeah. Now that's a newish product that is very exciting, because people can pick. And it's usually 1K1, right? At the end of the year for their tax.
1K1.
So you can diversify within the fund. And so you go and you work with someone like yourself, and you've got choices then. And so you find the person like and trust that can offer you, something like that. And you've got more choices without having to, because otherwise you end up having to get to know several operators or several fund managers, which you should do anyway. You should have several, because when you're ready to deploy money, they might not have a deal. And so, you do need a few, but the more you have that have multiple options, the chances are there's a deal there. So yes, it's a beautiful thing.
The other thing, and I'm glad you mentioned the operators, Ginny, because I think that's the other piece that a lot of passive investors really need to understand. And we talked about some of the issues in the last few years with folks trying to execute value add strategies on older Class C properties. Well, those operators they're going to make or break the deal. You know, raising the capital, especially in good times, because we were in very good times, was not hard. People have money and they have a goal, and you present them something in a reasonable business plan, they're going to go for it. But a lot of these operators didn't have the experience to work in this environment where things aren't, where the tides aren't high. So you have, tides that were going in the wrong direction, and you had a lot of operators that didn't have the experience or the bench really to operate in that space. And so there has been some distress, and there's been money lost. The truth is, if you've been in real estate long enough, I don't care what you did, you probably lost a little bit of money along the way. That's part of your journey. You can't let it affect you overall, because the idea is to have more upsides than downs. It's just the same thing as the market. It's just a lot less ups and downs, but you will take a few lumps. Ideally, you talk to people like Ginny or myself that have taken those lumps, and we basically give you some knowledge that allows you to avoid it. But there are going to be some lumps on the way. But through the fund and through through those kind of structures, the fund can then go in and really do a deeper dive into these operators. And we do have a process in place to make sure that we're really doing all of the homework on these operators that are saying one thing and perhaps not telling you the entire truth. And they've got a lot of skeletons in their closet. And so we take that information from them, we vet it, we do our own background investigations on them, very thorough investigations, a process in place so that takes that away from the individual investor. When they get something through the fund, they know that it's already gone through a intensive filtering process to make sure that the operators are better than your average person that you would potentially do a separate deal with. So I think that's critical.
That's a huge thing. It really is. And I think, people are learning quickly because syndications have performed so well. There's been a lot of talk. Everybody jumped in. You had all this FOMO and prices going up. But then now the pendulum swinging, we're having that cleansing of the industry. There's going to be some people hurt. We know that over the next probably 12, 24 months, we've been talking about there's adjustments going on, and those people that were caught with floating rate debt are giving back property. All their investors in some cases are having losses, but that's part of the process like you were referring to. And these fund management groups that are forming, and like you've mentioned, that we're really putting it through stringent due diligence processes, and we're finding out, who really knows how to operate and who doesn't. Because if the jockey can't run the horse through the business plan and, get it all done, it's not going to work. Right. So yeah, it's exciting times. This next 12, 24 months, many people feel like we've already bottomed out, or we are now. And so the upside is coming as some of those properties have to be recapitalized, reacquired anew.
Yeah. The only reason we've got this property in Dallas Fort Worth right now is because the developer, who was the initial builder of this deal, and they wanted to get it out to market and make their money on from their initial cycle from construction to sale. They got caught in the market cycle, and construction loans are short-term loans as well. So they had a 3-year window to take this from dirt really to a leased up product that they could then sell at a higher profit margin. Well, we're buying it. They never quite got to the full lease up, and now they got to get rid of it. And so they're selling it for cheap. And so those opportunities are out there. You just have to have the networks in place so that you can bring that capital and those deals to bring them together. And when you buy again, and this is the thing about real estate in general. I mean, even if all you can do is buy single family, or partner with someone to do single family deals, if you buy right, that's the majority of your problem. You got to buy right. But now obviously you have competition, and you got to do your research, and you got all kind of things that can happen. But the reality is, if you buy right, no matter what it is that you buy, you're probably going to make some good money. The question is, if you're actively doing this, how often can you buy right? if you're buying single families, that was kind of my decision cycle too. Like, okay, I can do single family. I know how to do the research and do all that stuff. But, after 3 to 4 months of that cycle, of that acquisition cycle, all I had was, in some cases, $300 a month cash flow, sometimes less. And so that's a tough one to repeat. I'd rather repeat that on higher multifamily deals because of the scale.
Yeah, where 1 or 2 vacancies doesn't kill you.
Yeah.
And to that point, and then we're going to have to keep going because we're running out of time, but amount of time it takes to vet all these deals, holy moly. So the busy W-2 worker, out there, it's hard to go through. You can't go through as many as we do full time. You just can't. And so it's the passive investing is really a priceless kind of a thing for everyday people, I think. But anyway, so very good. We're going to have you share your contact information in a moment. But like everything, like everybody I interview, I want to ask you, is there a pivotal person or event that brought you to where you are today or that's pushing you forward to where you're trying to be?
Yeah, no, and Ginny, we love talking real estate. We can do this all day long. But question, okay, and so here's my answer to that. I think the biggest thing in my life was really when I enlisted in the military, because we talked about limiting beliefs and how they impact our ability to do whatever it is that we want to do. The military does a very good job of getting you through limiting beliefs, and you're able to see that kind of success. So we had, when you go through basic training as an example, some people, they're afraid of heights. My God, they're afraid of heights. But guess what? If you want to pass basic training, you're going to have to get on that ladder, and you're going to have to climb the ladder. You're going to have to put your foot over the ladder and climb down on the other side, hundreds of feet up in the air. That's just an obstacle course. You must do that, right? And so there is a limiting belief that when you finally are able to do that, because you've got more confidence in yourself, because you have a team that's pushing you along the way, and you take that step above the ladder and you start climbing down. Wow. So now you've been able to go through a limiting belief destruction process. And so imagine doing that in multiple ways through a career in the military, where they're just teaching you how to be, teaching you how to be a better leader, teaching you how to, do things in a very methodical way. If the Army can do anything, it's basically it has to be able to maintain. Our armies have been able to maintain its superiority, our military, our armed forces, because of these processes. But initially, it all boils down to, can you get that individual soldier to cut across those limiting beliefs? And to me, when I was able to do that, now, with me, it was never about heights. With me, it was more about discipline. I was young. I was 17 years old. I graduated high school. I just turned 17. It was about discipline. And it was about, I was never a little guy. I was always a big guy. I played football, and it was about, being humble in some cases. That was just hard to do, having somebody scream at you and tell you what to do, and those kind of things that you would think that you would never be able to operate. In my case, being able to do that, being able to accomplish that, and then loving it enough to want to do it for the next 20 some odd years, right? So long answer to that question, but I would say joining the military was a game changer for me. And when people, when younger kids don't know where they want to go, one of the first things I recommend is maybe you should do the military. Pick something that you like. Obviously, there's all different kind of careers you can do within the military. Pick something, serve your country, do something bigger than yourself, and you'll come out much better for it on the other end.
Wow, that's surprising to me. I wouldn't have thought you needed humility, because you seem like you have it so well,
I try, but we all have our moments, right?
Yeah.
We all have our moments, and that's where the team can kind of knock me over the head a little bit when I get a little bit too rambunctious, and they go, that doesn't make any sense, Ray, and here's why. Perfect. And the ability of a leader to listen to others, it's not always easy.
No, that's true. That's true. Funny. All right. Well, so share how people can reach you.
Yeah, the easiest way is just my name, IsmaelReyReyes.com. And from there, they can connect. There's a link in bio there. They can link and schedule a call. I do an initial consult for free for anybody that is thinking about real estate. I'm happy to talk to them and get them organized. I used to spend a lot more time because, like you see, Ginny, I love talking real estate. I used to spend a lot more time doing that for free. My time has become more limited. So I'm using platforms, YouTube and other channels, blogs to provide knowledge without it, personally taking away from my day-to-day time to do that. But I'm happy to get on a call with anybody at least once to help them kind of get their thoughts together and understand what it is they're trying to do and see if I can give them some guidance to get them there quickly.
That's excellent. That's so true. Okay. Well, very good. Well, thank you for coming on. I do appreciate it. And we'll have to stay in touch. There's several things we need to keep talking about. So I'm going to go ahead and say thank you, and we'll put everything in the show notes.
Thank you, Ginny, for having me.